Welcome to the Deep Dive. Today, we're digging into a company that, well, you probably see their trucks all the time, but maybe haven't thought too deeply about. We're talking Waste Management, Inc., WM. And our mission today is to unpack how this company, long defined by those green trucks, is really transforming.
It really is. Our sources paint a picture that goes way beyond just garbage collection. You need to see WM now as arguably North America's top environmental solutions provider, and a tech-enabled one at that.
Exactly. So the central question we're tackling is, how does a business built on, let's face it, essential but maybe unglamorous infrastructure become this high-growth, tech-driven profit engine?
That's the core thesis, isn't it? We see it as a really compelling long-term story.
Yeah.
It's anchored by that steady, non-cyclical demand. Everyone needs trash picked up, but it's also being supercharged by these new growth drivers.
Technology, sustainability, huge investments there.
Yeah.
It feels like a classic wide moat business that's actively, well, digging that moat even wider.
You got it. So where do we start? The foundation has to be that core competitive edge, right?
Right. Let's get into section 1. The unreplicable moat. Assets, resilience, and that all-important pricing power.
Okay, so the first thing to grasp about WM, the bedrock really, is just how resilient the basic business is. Waste collection, disposal, these aren't things you choose to cut back on. They're essential, non-discretionary.
So unlike a lot of industries, they're not really subject to the ups and downs of the economy, are they? Good times, bad times, the trash keeps coming.
Precisely. That gives them incredibly stable, almost annuity-like revenue. It's a predictability that's frankly rare in other large industrial sectors.
That stability is key. But, like you hinted, the real power, the moat, isn't just picking up the trash. It's where it goes. Let's talk landfills. The landfill advantage.
This is huge. It's the structural barrier that gives them that durable pricing power we mentioned. Think about it. WM runs the biggest network in North America, over 250 municipal solid waste landfills, plus like 5 specialized hazardous waste sites.
And these aren't just big holes in the ground, are they? People might picture that, but it's far more complex.
Oh, absolutely not. It's incredibly complex engineered infrastructure. Forget just digging a hole.
So the barrier to entry, it must be immense.
It's enormous. Just trying to site a new landfill, you're talking potentially decades, huge capital outlay, intense hydrological studies, community pushback, the whole NIMBY thing. Not in my backyard.
And then the regulations.
Exactly. Massive regulatory hurdles. These aren't just dumps. They have to meet extremely strict requirements under the Resource Conservation and Recovery Act, RCRA.
Can you give us a sense of what those RCRA requirements involve? Why is a permitted landfill so valuable?
Well, they're meticulously engineered. You've got multi-layer liner systems, thick plastic membranes, compacted clay to prevent any leakage. You have sophisticated leachate collection systems constantly pulling out contaminated liquid for treatment, plus networks to collect the methane gas produced. They're basically environmental protection systems first, disposal sites second.
Wow, so the existing capacity WM controls.
Yeah.
It's scarce and incredibly valuable.
Exceptionally scarce. And that scarcity is what gives them the confidence year after year to push price increases. They have real pricing power.
Makes sense. If you control the only legal, permitted final destination for waste, you fundamentally control a key price point for the whole system. But okay, before it gets to the landfill, it needs collecting. And that collection segment, that's the main revenue driver, isn't it?
It's the engine, absolutely. Generates those predictable cash flows we talked about. What was it, $7.6 billion in revenue just in the first half of 2025? Reliable stuff.
And even this core legacy business is getting a tech upgrade, the WM Smart Truckee initiative.
Right. This is where the story starts getting really interesting on the tech side.
Okay, but I have to push back a bit here. Smart Truck. Sounds good. But doesn't every big logistics company use GPS and road optimization now? Is this really a competitive advantage, or is it just, table stakes today?
That's a fair question. And yeah, basic GPS is standard, but WM system goes much, much further. They're essentially turning every single truck into a mobile data hub. We're talking advanced telematics, real-time weight sensors, cameras for service verification. It's a massive data capture operation.
Okay, so they're collecting tons of data. What are they actually doing with it? What's being optimized beyond just, like, the shortest route?
So much more. Dynamic route efficiency based on how full containers actually are. Predictive maintenance on the trucks themselves. The system learns patterns which customer bins fill up fastest on which days. So they shift from rigid fixed routes to routes that are constantly being tweaked based on that real-time data flow.
Ah, I see. So it's not just driving less.
It's driving smarter. It cuts down non-revenue miles, slashes fuel consumption, and lets them use their workforce much more efficiently. The sources suggest the cumulative impact on operating costs is huge.
Okay, that gives them a structural cost advantage over smaller guys who just can't match that level of data-driven operation. So if the landfills provide the structural moat and the smart trucks deliver the operational efficiency for data, this brings us to the idea of the synergistic ecosystem, the whole network working together.
This is really the aha moment, I think. The network effect is where WM's advantage becomes almost unbeatable. They're not operating in silos, collection here, landfill there. It's deeply integrated. They're the only ones in North America with this kind of vertical integration, depth connecting collection, hauling, processing, and final disposal at this scale.
Okay, give us a concrete example. How does that integration, fueled by data, create a cost advantage that, say, a regional hauler just can't touch?
Okay, think about the waste stream itself. Data from the smart truck tells WM exactly what's being collected, where, when. This doesn't just optimize the truck route, it optimizes the whole path to the transfer station, the sorting facility, maybe the landfill. And remember, the landfill isn't just a disposal site anymore. As we'll get into, it's also an energy production facility. That renewable natural gas, the RNG, it cycles back to fuel WM's own truck fleet, the same trucks that collected the waste in the first place.
Oh, it's a closed loop, a self-feeding system.
Pretty much. It dramatically reduces the reliance on buying external fuel like diesel, insulates them from volatile energy prices, and cuts internal operating costs.
A competitor focused just on collection or just on disposal. They simply can't replicate that kind of internal cost efficiency, can they?
It's incredibly difficult, if not impossible, to match that integrated advantage.
And that closed loop idea, using waste to fuel the trucks, flows perfectly into our next section. How WM has managed this really smart pivot, turning sustainability from just a cost or maybe even a regulatory burden into a core high-margin growth area.
Yeah, this isn't just greenwalking or a PR exercise. It's a massive strategic shift.
And it's backed by serious money, right?
Absolutely. We're talking around $3 billion in planned capital investment, specifically for sustainability-related growth projects between 2022 and 2026. That level of spending tells you management sees this as fundamental to the future strategy, not just some side project. They're genuinely retooling their industrial base for this.
Let's talk recycling first, because historically recycling has been, well, kind of a headache for waste companies, hasn't it? Really volatile.
Notoriously volatile. The prices for commodities like recycled paper or plastic could swing wildly depending on global demand, especially from places like China. It could turn profits into losses almost overnight.
So how are they fixing that? How do you stabilize something so dependent on unpredictable commodity prices?
Through aggressive automation. It's a full-on recycling revolution inside WM. Out of that $3 billion capex we mentioned, about $1.4 billion is going directly into upgrading their recycling infrastructure through 2026. They're moving away from relying so much on people sorting things by hand.
Towards what kind of technology? What does an automated recycling plant look like?
Think optical sorters using high-speed infrared cameras to identify different types of plastic or paper instantly. Robotic arms guided by AI vision systems that can pick out contaminants with incredible speed and accuracy, highly advanced material recovery facilities, or MRFs.
So industrial automation tackling the messy problem of mixed recyclable.
Exactly. Industrial automation at its finest.
And what's the payoff? Why should you, the listener, care if they use robots instead of people to sort plastic bottles? What's the key outcome?
It really boils down to two things.
Right.
Recovery rate and, critically, purity. Automation pulls out more usable material, yes. But the most important part is it drastically increases the purity of the final product, those bales of sorted plastic, paper, metal.
And purity equals profit.
Purity equals stable profit. WM has a clear, aggressive target. Get contamination in their recycling streams down to 10% by 2025. Higher purity materials command much better, premium prices, and crucially, it makes the demand for their output more consistent, less subject to those wild commodity swings. Buyers want clean material.
And are we seeing results already? Is this strategy actually working?
We are. The numbers show it. In Q2 2025, the recycling segment wasn't a drag anymore. It was actually a positive contributor to earnings. Combined with the growth from their renewable energy side, which we'll talk about next, these sustainability initiatives added something like $36 million in adjusted operating EBITDA growth. They're proving the model. Green can be high margin.
Okay, perfect segue. Let's talk about that other big sustainability engine, WM Renewable Energy, RNG. This sounds almost like alchemy turning landfill gas, a liability, into a valuable fuel.
It kind of is. It capitalizes on the natural decomposition of organic waste in landfills, which inevitably produces methane. Methane's a really potent greenhouse gas, much worse than CO2 in the short term. So landfills are required to capture it anyway for safety and environmental reasons.
Right, they used to just burn it off, flare it.
Exactly, or maybe convert it to some low-value electricity. But the big shift now is upgrading that captured gas into high-value renewable natural gas, or RNG. It's basically pipeline-quality natural gas, but derived from waste.
But this isn't a small side business, is it?
Yeah.
They have ambitious targets.
Huge scale. They're aiming to beneficially use 65% of all the landfill gas they capture by 2026. And here's the smart part. They're not just producing this valuable gas and hoping for a good price on the open market. They've locked in stability.
How so?
They've secured long-term, fixed-price contracts, offtake agreements for 90% of their projected RNG production for 2025.
Ah, so they know what price they're getting. That de-risks it considerably.
Totally de-risks it. It creates a reliable, predictable, recurring revenue stream, shielding them from the volatility of natural gas prices. It's almost like creating a utility business out of landfill gas.
And this loops back to the synergy point we made earlier, doesn't it?
It's the perfect example of that closed-loop system. A big chunk of the RNG they produce is used to power their own fleet of collection trucks, which run on compressed natural gas, CNG.
So the waste they collect literally fuels the trucks that collect the waste.
Exactly. It slashes their spending on diesel fuel, cuts operational costs, and significantly reduces their own carbon footprint. It's this virtuous cycle that's just incredibly efficient.
Okay, so we've got operational efficiency dialed in with smart trucks. We've got sustainability turning into a major profit center with recycling and RNG, but WM isn't sitting still. They're actively pushing the boundaries, which brings us to this really big move. The acquisition of Stericycle, and the creation of this whole new segment, WM Healthcare Solutions.
Yeah, this was a transformative deal, very ambitious, moving them squarely into a specialized, highly regulated field.
What's the attraction of the medical waste market?
Well, Stericycle instantly gives WM a leading position in the U.S. medical waste space. We're talking sharps disposal, biohazardous materials, regulated medical stuff from hospitals, clinics, labs. It's a growing market projected to hit maybe $3.6 billion to $3.8 billion by 2028. And importantly, it's seen as high margin and non-cyclical.
Why is it considered so high margin and non-cyclical? I mean, hospitals generate waste regardless of the economy, sure. But what makes handling it so much more valuable than, say, regular commercial trash?
It's all about the complexity driven by regulation and safety. You can't just toss medical waste into a regular garbage truck. Stericycle built its entire business around specialized collection protocols, treatment methods like autoclaving or incineration, and disposal processes that meet very specific state and federal healthcare rules.
Requires special training, special equipment.
Exactly. A highly trained workforce, unique infrastructure.
Yeah.
That inherent complexity allows for higher margins compared to standard solid waste services.
Okay, so the market's attractive. But how does a company like WM, whose strength is really industrial scale and efficiency, successfully integrate a specialized business focused on medical compliance? This feels like a major execution risk.
It absolutely is the biggest execution challenge they face right now, no question. But the strategic logic is pretty clear. Use WM's massive scale to dramatically cut Stericycle's operating costs. See, Stericycle had a big network, but it wasn't necessarily the most efficient logistics operation. WM's superpower is that sophisticated, data-driven logistics platform, the same one powering the smart trucks.
So what are the specific synergy targets? How do they actually lower the cost of handling medical waste?
The big one is route density and optimization. WM can take Stericycle's existing collection routes, which might have involved trucks driving long distances partially empty, to reach scattered clinics and integrate them into their own hyper-optimized network.
Fewer deadhead miles, better truck utilization.
Precisely. Plus, consolidating things like back-office functions, procurement, IT systems onto WM's existing, much larger platform, that immediately unlocks significant operational cost savings.
And are they delivering? Are we seeing financial proof that this integration is actually working?
The early signs are positive, yes. The new WM Healthcare Solutions segment chipped in a solid $110 million of adjusted operating EBITDA just in Q2 2025. That's a strong start.
And they have ambitious targets going forward.
Very ambitious. Management is aiming for $250 million in annual run rate cost synergies from this deal by 2027. That's a huge number.
If they hit that, wow.
If they hit that, this acquisition doesn't just give them a foothold in a new growth vertical. It becomes a major driver of margin expansion for the entire company over the next few years.
Okay, so all these moving parts, the efficiency gains, the sustainability investments paying off, this big Stericycle integration, it should all be showing up in the financial results. Let's look at the numbers.
And they really do confirm the story. You see an accelerating high-quality business here. Revenue growth was solid, 8.0% in fiscal 2024. But look at Q2 2025, revenue jumped 19% year over year. That's the impact of their pricing discipline, plus the immediate contribution from Stericycle kicking in. It's both organic and strategic growth happening.
And the core business, the legacy WM operations, they're more profitable than ever.
Record profitability, actually. It's really a testament to those smart truck efficiencies and the enduring power of the landfill network. The legacy WM business hit a record-adjusted operating EBITDA margin of 31.3% in Q2 2025. For an industrial services company, that is truly best-in-class performance.
Let's circle back to that pricing power. You said it's key. How does it show up financially?
It's maybe the clearest signal of their strong competitive position, their moat. They consistently push through price increases that are higher than the general rate of inflation. It was 6.7% in 2024, another 6.4% in Q2 2025. When you can consistently charge more year after year, significantly above inflation without losing substantial business.
It tells you your service is essential, and competitors can't easily undercut you.
Exactly. It's the financial fingerprint of a market leader with structural advantages.
Okay, profits are great, margins are great. But fundamentally, this company is about generating cash, right? Free cash flow.
Absolutely. That's where the investment case really shines. They just raised their full year 2025 free cash flow guidance. They're now expecting between $2.8 billion and $2.9 billion.
And that increase wasn't just operational performance, was it? There was technical factor.
Right. A significant chunk of that guidance lift came from a favorable tax change, the restoration of 100% bonus depreciation.
Okay, bonus depreciation. Sounds technical. Break that down for us. Why does this tax rule suddenly add hundreds of millions to WM's free cash flow?
So think of it as accelerated tax savings. WM is constantly spending huge amounts of capital, buying new trucks, building those automated recycling plants, maintaining landfills. Depreciation is how they account for the declining value of those assets over time. It's a non-cash expense on the income statement. Bonus depreciation lets them deduct the entire cost, 100% of certain new assets immediately in the year they buy them, instead of spreading that deduction out over many years.
So spend $1 billion on new trucks, deduct $1 billion from taxable income right away.
Essentially, yes, for qualifying assets. This drastically lowers their current tax bill. And since free cash flow is basically cash from operations minus capital spending, and taxes are a cash outflow.
Lower taxes mean higher free cash flow.
Got it.
Especially helpful when you're investing $3 billion in new sustainability projects.
Exactly. It's a major cash flow tailwind for them right now.
And there's another indicator of cash flow quality we should mention.
Yes, it's a good health check. Look at the first half of 2025. Their net cash from operations was $2.75 billion. Their reported net income, or profit, was $1.36 billion.
Cash flow significantly higher than net income.
More than double. That gap is largely due to big non-cash charges like depreciation. It tells you their reported earnings are backed by very strong real cash generation. It's a sign of high-quality earnings.
So with all this cash flowing in, what's the plan? How are they allocating it?
Management has a pretty clear three-pillar strategy. First, shareholder returns. They've raised their dividend for 21 straight years. That screams stability and confidence. Second, reinvesting in the business through growth CapEx, especially those high-return sustainability projects like RNG and recycling automation. And third, strategic mergers and acquisitions. They're a natural consolidator in what's still a pretty fragmented industry, although Stericycle was obviously a huge one.
We do need to note the temporary pause related to Stericycle, though.
Right, that shows financial discipline. Because the Stericycle deal involved taking on significant debt, WM prudently decided to temporarily suspend their share buyback program. The priority right now is paying down that debt, de-levering the balance sheet. They expect to get back to their target leverage levels sometime in 2026. It shows they can do a big deal but still manage the finances carefully.
And looking further out, the ambition is definitely there. They talk about hitting potentially $29 billion in revenue by 2027 at their investor day. This isn't a company just coasting.
No, this is an accelerating growth story, multiple levers pulling at once.
Okay, to really appreciate WM's position, let's zoom out a bit. What does the overall North American waste market look like?
It's huge. Estimates vary, but somewhere in the range of $210 billion to maybe even $471 billion annually. And it's growing steadily, maybe 4% to 6% per year. Mature, but still growing.
And dominated by a few large players, right?
In oligopoly.
Definitely an oligopoly. You have WM, Republic Services, Waste Connections is the big three, but WM is the clear heavyweight.
By scale, and you'd argue by efficiency. Absolutely. WM's trailing 12-month revenue is around $22 billion, well ahead of the others. And their financial metrics show better efficiency, too. Look at return on equity. WM's is about 34.4%. That suggests they're generating more profit from their assets than their peers. They're the most capital-efficient operator.
Let's talk tech again, because it feels like the whole industry is at a tipping point. AI in waste management is supposedly growing super fast, like over 20% CAGR. Where else is technology making inroads beyond the trucks?
A big area is inside the landfills themselves, what they're calling connected landfills. This involves using SCADA technology.
SCADA. What's that in simple terms?
Think of it as industrial control systems. SCADA lets them monitor and control processes remotely in real time. So in a connected landfill, you have networks of sensors constantly tracking things like leachate flow rates, that contaminated water, the pressure and quality of the methane gas being captured, even groundwater quality around the site.
So it's about tighter control, better safety, more efficiency.
All of the above. It helps minimize environmental risks, ensures they're maximizing the valuable gas capture for RNG, and just generally gives them much finer operational control over these critical, highly regulated assets. It's risk management and optimization rolled into one.
Okay, that feels like a necessary evolution, but the sources suggest the biggest potential game changer isn't internal tech, it's an external regulatory shift. Extended producer responsibility, or EPR.
Yes, EPR. This could be massive, especially for the recycling business. It fundamentally changes who pays for recycling.
Oh, so.
Okay, traditionally, the cost of recycling programs has fallen mostly on municipalities, meaning taxpayers. EPR laws, like the big one in California, Senate Bill 54 or SB 54, flip that script. They shift the financial responsibility for managing the recycling of packaging waste away from cities and onto the companies that produce the packaging in the first place, the manufacturers.
So the Cokes and Pepsis of the world now have to pay for recycling their bottles and cans.
Essentially, yes. They become financially responsible for meeting specific recycling targets set by the state. For SB 54, a key target is getting 65% of plastic packaging recycled by 2032.
And if they don't hit those targets?
Penalties. Significant financial penalties. That risk is what drives the whole system. SB 54 mandates creating these new organizations called Producer Responsibility Organizations, or PROs, funded by the manufacturers. These PROs will manage a huge pool of money, potentially $5 billion over 10 years just in California, specifically to pay for recycling services.
Okay, so these PROs, flush with cash from manufacturers, need to hire companies to actually do the recycling and meet those state targets. Why is WM positioned to win those contracts?
Because the PROs need two things above all else: guaranteed scale and guaranteed purity. They need service providers who can handle massive volumes reliably and deliver recycled materials clean enough to actually count towards those aggressive state mandates.
And WM, with its huge network and its $1.4 billion investment in automated sorting,
is uniquely positioned. That investment in automation delivers the high purity bales the PROs will need, and their scale is unmatched. They become the logical, maybe the only primary choice for these large long-term PRO contracts.
So this legislative shift effectively creates a huge, stable, compliance-driven revenue stream for WM's recycling arm.
Exactly. It transforms recycling from a volatile commodity business into something much more like a stable fee-for-service utility contract, driven by regulation, not just fluctuating market prices. It's potentially a foundational change for the economics of that segment.
Okay, it's a powerful narrative. Technology, scale, sustainability, regulatory tailwinds. But we always need to consider the other side. What could go wrong? For you, the listener, what are the key risks here?
Well, number one has to be execution risk, especially with Stericycle. That integration is complex. They've promised $250 million in annual synergies by 2027. That's a big number. If they stumble on integrating the logistics, the IT systems, even just the different company cultures,
then they won't hit that synergy target. And the price they paid for Stericycle might start to look too high.
Exactly. It puts pressure on delivering those cost savings.
What about external risks? Things outside their control.
Regulatory risk is definitely one. EPR laws like SB 54 offer huge potential upside, but the exact implementation details can get messy. There can be delays, political wrangling, maybe targets get watered down. That could slow down or reduce the size of that revenue stream from the PROs.
And the economy. You said they're non-cyclical, but are they completely immune?
Not completely. While residential trash collection is very stable, their industrial and construction waste volumes are sensitive to economic cycles. A deep or prolonged recession would inevitably impact those parts of the business.
Okay, and the final big one, valuation. The stock isn't cheap, is it? Trading at what, nearly 29 times forward earnings? That's a premium.
It is a premium valuation, significantly above its own history and its peers. That's a legitimate risk factor. It means the market is already pricing in a lot of success, hitting those sustainability investment goals, delivering the Stericycle synergies on time. There's less room for error. If they miss a step, the stock could be vulnerable.
And you also noted some insider selling earlier in 2025.
Yeah, that's a cautionary flag. Now, insiders sell for many reasons: diversification, personal liquidity. But when management sells stock at elevated valuation levels, it's something investors should at least be aware of and critically evaluate.
So given these risks, how does WM management try to mitigate them? And how do they justify that premium valuation to investors?
Their main mitigation tool is their sheer scale. Scale lets them absorb costs like new environmental regulations much more easily than smaller competitors. Sometimes regulations even help them by making it harder for smaller players to compete. Their diversification also helps across residential, commercial, industrial, recycling, RNG, and now medical waste, buffering them somewhat from downturns in any single area. And the technology, specifically producing those high-purity recycled bales, acts as a hedge against commodity price swings, making that revenue stream more stable.
Okay, so let's synthesize this. The bull case versus the bear case.
Right. The bull case rests on that incredibly wide, hard-to-replicate moat built on landfills and scale. It emphasizes their technology leadership in areas like smart trucks and automated recycling, and it highlights the clear growth paths from RNG, enhanced recycling driven by EPR, and successfully integrating Stericycle for medical waste dominance and cost savings.
And the bear case.
The bear case worries about that premium valuation, arguing there's no margin for error. It focuses on the execution risk. Can they really deliver $250 million in Stericycle synergies? And it points to potential regulatory delays or a sharper than expected economic downturn hitting industrial volumes.
But overall, the sense from the sources is that the quality justifies the price.
Largely, yes. The argument is that the premium is warranted because of the proven quality of the business, those record margins, the consistent pricing power, combined with these very specific, well-defined growth catalysts that offer a clear path to significant future cash flow growth. The market believes they can execute. Hashtag tag outro.
So we've traced WM's journey, successfully pivoting, it seems, from just a traditional heavy infrastructure company into something much more like a high-tech platform, using data, using automation, using renewable energy to really solidify and even expand its competitive lead.
They've built this incredible financial fortress around what is, let's face it, the necessary but messy end of almost every supply chain.
Which leaves us with a final provocative thought for you, the listener, to consider. We've talked a lot about smart trucks, AI sorting, renewable natural gas, the circular economy. But think about the truly ultimate enduring competitive advantage, the asset that just cannot be replicated no matter what future technology brings. Even if we perfect waste to energy or develop incredibly advanced chemical recycling processes decades from now. What is the one single non-negotiable, absolutely essential asset that WM controls, ensuring its relevance for generations?
Think about it. No matter how you process waste, burn it, chemically break it down, whatever, there's almost always something left over. Some residual ash, some inert sludge, some unusable byproduct. And where does that final residue have to go, legally and environmentally? It has to go to a permitted final disposal site. WM controls the largest network of that highly scarce, heavily regulated, essential final disposal space, the landfills. That final repository, that permitted patch of ground, might just be the single asset whose scarcity and regulatory necessity guarantees WM's indispensable role long after the trucks and the sorting robots look completely different. They own the unavoidable endpoint.
That's how deep the moat really runs. Thanks for joining us for the deep dive.